Welcome to Octopi Realty's YouTube channel. We originally posted a reel on what ChatGPT thought were the top buy to rent markets in the United States. We thought that we disagreed with them, and so we do an analysis on actually whether each of these markets were valuable to get into from a buy to rent perspective. We're going to look at property prices, mortgage rates, rental rates, what's happening with population and appreciation to really understand whether these markets make sense. We're going to be doing each of the markets in a different video, and we're going to be starting with Austin. So I think everybody knows Austin took off during the pandemic and it's seen huge growth as a market. So it doesn't surprise me that ChatGPT thought that Austin was a strong market to go after. Now, if we look at the average property price at the moment in Austin, the current price for homes that are currently selling is $476,000. That's actually down on a 2-year basis. So it's down from $554,000. That's a 14% decrease in home values over the last 2 years. Just so you know, the US is increasing an average of 7%. So over the last 2 years, Austin has seen a huge drop off, which is something that we'd probably expect. We know there was a huge population influx as well. The population in Austin's 983,000 people. That's actually growing at a rate of 1.8%. The average growth rate of the whole of the United States is 0.44%. So it is growing at an above average rate. The reason that we bring these up is that with house prices low, normally with a buy to rent, you'd also be looking for home appreciation. It's obviously not happening in Austin at the moment. You could argue that coming in at a time when the market's very low and very slow is positive. However, if you look at the average house price in like Dallas or Houston, one of the other big cities, they're significantly lower at like 300K. So I definitely ease caution of being like, but prices in 2022 were 550K. It's like, it's probably going to get back there, but it's going to be much slower. And with all other markets increasing by 7%, the fact that it's a negative 14% is definitely a concern. Now let's talk about mortgage rates. If we look at mortgage rates, obviously we need to be careful with this because everything's really high at the moment at 7%. What we actually need to look at is where things are from a perspective of where they're going to be at 4%, which is where everyone thinks they're going to go back to. We don't think they're going to get much lower than 4%. So let's look at 7%. If you put down a 20% deposit and get an interest rate of 7%, if you include taxes and fees, you're going to be looking at a mortgage repayment with taxes and homeowners insurance of $3,342. If you look at it from a 4% perspective, you'd be at $2,625. So there is a big difference. At the moment, we're at $3,300. That when it gets back down to 4%, which it will at some point in the future, you'll be looking at more like $2,600. So what does that mean from a rental perspective? So the current going rate for rent in Austin is $2,300. So you sort of guessed it, $3,300, which is where your repayment would currently be. You're looking at a negative $970 monthly deficit. Even at 4%, you're currently looking at a negative $253 percentage. Now, again, we know the market's slow in Austin particularly, but what we did was we then had a look at, okay, well, how do things look from a rental growth? So the rental growth from 2022 has been 3%. So it was at 2,300, it's now at 2,371. So there's been a 3% rise. There's actually been an 11% rise in rental rates across the United States during that time period. So Austin, again, is way behind the growth curve from a rental perspective. So in summary, what we're saying is that the houses are expensive, and even with lower interest rates, the current rental rate isn't going to give you the profits that you need. The rental rates are growing much slower than everywhere else in the US, and appreciation is much slower. So it doesn't mean Austin's not a market to invest in. Just from a buy to rental perspective, if you look at it from a top line level, it's not going to work. Of course, there's going to be deals there and there are going to be areas that it does work. It's just not going to work at this moment in time. So we definitely say Not only is this not top five, this is a market that we would just avoid at all costs at the moment and revisit it at a later date. Thank you so much for watching. If you'd like this and you want to find out more, the other markets we're going to be doing are Raleigh, North Carolina, Orlando, Florida, Phoenix, Arizona, and Atlanta, Georgia. So they're the other markets that ChatGPT pulled out. So we're going to be doing exactly the same analysis to identify whether ChatGPT was right in any of these areas. Thank you very much for watching. Please follow and subscribe if you like this and to get more real estate information from the United States.